Welcome to the chip market, the place where we help you invest smarter in the world of chips. Well, the big news just dropped. Intel and NVIDIA have announced a massive $5 billion alliance. This is a deal that's already reshaping the entire competitive landscape, and it's got every investor asking, what happens next? So, let's start with the headline number, $5 billion. That's how much NVIDIA is investing directly into Intel stock. I mean, a move like that doesn't just make ripples, it sends absolute shockwaves through the entire industry. And here's what the market thought about it. Intel's stock just exploded, jumping 25 to 30% basically overnight. That's a huge shift in sentiment. But beyond the initial hype, what does this alliance really mean for the future of both companies? And more importantly, what does it mean for your portfolio? Okay, so to really get our heads around this, we're going to break it down. We'll look at 5 key areas. First, is this a real turning point? Then, we'll get into the manufacturing gauntlet. Can they actually build this stuff? We'll also look at the competitive shockwave, run through some financial scenarios, and finally, give our investors' verdict.
All right, let's get right into it. The first big question, is this a genuine strategic shift for Intel, a real turning point? Or is this just a short-term boost fueled by all the market hype? So if you look at the nuts and bolts, this is way more than just a cash injection. It's a really deep co-development deal. They're targeting 2 massive markets, AI data centers and high-performance PCs. But here's a critical point to remember. The current agreement does not include Intel making NVIDIA's core GPUs in its foundries. And don't hold your breath for products. We're looking at a 2026 or 2027 timeline.
So that really gets us to the heart of it, doesn't it? When you combine Intel's x86 architecture with NVIDIA's absolute dominance in GPUs, does that fundamentally change Intel's story for the long haul? You know, when you break it down, this deal makes a ton of sense for both sides. For Intel, this is a golden ticket. It plugs them directly into the booming AI market, where, let's be honest, they've been lagging. And for NVIDIA, well, they get to secure their place in the dominant x86 ecosystem. Plus, it gives them a path to a second source for manufacturing. That's huge. And it lets them hedge their bets between ARM and x86. It's a really smart symbiotic move. Okay, so the strategy looks great on paper. But a vision is one thing. Executing it is another entirely. And that brings us to maybe the biggest hurdle of all. Can Intel's manufacturing and its advanced packaging tech actually build these super complex hybrid chips and do it at scale? Right, and this is the elephant in the room. The current deal, as we said, doesn't include it. But the possibility that NVIDIA could one day become a major customer for Intel's foundry business, that's the big question hanging over this whole partnership. So how would that even happen? Well, it would likely be a slow step-by-step process. In the near term, you might see Intel just providing its advanced packaging services. That would help ease the huge bottleneck everyone's facing with TSMC's capacity. Then, maybe in the midterm, NVIDIA outsources some smaller, less critical chiplets to Intel's fabs. And then, the big one, long-term, if Intel really proves itself, you could see NVIDIA dual-sourcing a major GPU. That would be a game-changer. And really, Intel's special sauce here is its advanced packaging tech, specifically EMIB and Foveros. Think of EMIB as a high-speed bridge connecting different chiplets side by side, like an Intel CPU die and an NVIDIA GPU die. Foveros takes it a step further, stacking them vertically, 3D style, for even better performance. Success with these technologies, it's absolutely non-negotiable for this whole thing to work. Ultimately, this all comes down to a high-stakes manufacturing race. For any of these new co-developed chips to be competitive, Intel has to hit its super aggressive roadmap. All eyes are on its 18A process node. The goal here isn't just to catch up, it's to achieve parity or maybe even pull ahead of TSMC's N2 node. That is going to be the key battleground in 2025 and 2026. So when 2 giants like this team up, it's going to send shockwaves everywhere. So what does this mean for everyone else? Let's take a look at the second-order effects across the market. Yeah, to really grasp the threat here, you just have to look at where things stand today. Intel basically owns the laptop CPU market, and NVIDIA, they have an iron grip on discrete GPUs. This partnership is all about fusing those 2 dominant positions together into one powerful product. That creates an absolutely formidable force in both PCs and the data center. And this quote from an analyst really hits the nail on the head, especially when you think about AMD. The idea is, once you have an Intel CPU with NVIDIA's NVLink built right in, why would you default to an AMD EPYC processor for your GPU servers? It directly challenges EPYC's biggest selling point in that space, and it could seriously neutralize a huge growth area for AMD.
So who feels the heat from this? Well, the ripple effects are pretty widespread. AMD is without a doubt the most exposed. They're facing pressure across their entire business. Then there's TSMC. Their near monopoly on cutting-edge chips gets a real challenge, which gives NVIDIA a lot more bargaining power. And what about the cloud giants? Someone like Azure will probably jump on this early, but a company like AWS? This might just push them to double down on their own in-house silicon to avoid being too dependent. Okay, so we've talked strategy, we've talked competition. Now, let's translate all of this into dollars and cents. What could this actually mean for Intel's revenue over the next 5 years or so? All right, looking out to around 2028, our base case suggests this could add a pretty significant $2 to $3 billion in new revenue for Intel each year. Now, in a bull case, if everything goes perfectly, that could be over $5 billion. But you see that huge range between the best and worst cases? That tells you one thing. This is all critically dependent on flawless execution. So, if you're an investor, what are the key things to watch for? Well, this timeline is your roadmap. First up is regulatory approval late next year. Then in 2026, we should start to see the first real technical details. But the real proof will be in 2027 and 2028. That's when we'll see samples, benchmarks, and the first actual products and design wins. Hitting every single one of these milestones on time is going to be crucial. Okay, so we've looked at the strategy, the huge technical challenges, and the potential financial payoff. It all comes down to this. What's the verdict for an investor looking at Intel right now?
Based on our assessment, we're upgrading Intel to a buy, but with medium conviction. The risk-to-reward balance has definitely shifted and looks much more attractive now. Now, for NVIDIA, this deal is a great strategic positive, for sure. It strengthens their position, but it doesn't really move the needle on their financials in the near term, so we're just maintaining our current view there.
Now, let's be really clear here. While the potential upside is huge, the road ahead is absolutely loaded with risk. The number one risk? Execution. Intel's ability to deliver on its incredibly ambitious tech roadmap is the single biggest question mark. And of course, you have to watch for how competitors like AMD respond and whether the market actually adopts these new platforms. There's no question this partnership has completely redrawn the map of the semiconductor industry. And for investors, it leaves us with a really compelling, high-stakes question. Is the promise of a revitalized AI-powered Intel finally a reality? Or are the massive execution risks just too high to bet on?
Thanks so much for watching our analysis. You know, this market moves at lightning speed, and staying informed is everything. So if you found this breakdown helpful, please hit that like button, share it with someone who might be interested, and of course, subscribe to The Chip Market. We're here to help you invest smarter.